Dave, we mentioned last episode, we got a new sponsor.
Yes.
And let me just chat you through them.
Tell me.
They're a business called Finance Technology Services Limited. They are a tech solution provider in the financial sector. They will work with startups right through to major players, and they got all the bits covered. What they actually do, I think, in the main, they've got a contract administration system. So that's the bit when financial contracts go live. It helps the lender manage the ins and outs, the cash flow, the billing, collecting, and they call that Castellan.
Okay.
So basically, as I say, they are experienced CTO and CIO services, guiding them, everybody through their technology platforms. And I think the key thing, Dave, they're not a one-size-fits-all. They'll look at each individual client's requirements and look on a build-to-fit basis. Finance Technology Services, sponsoring today's episode.
Okay, great. Yeah, thanks very much, guys. Sponsorship is very helpful, and we thank you so much. Right, Trevor. Episode 9. Here we blooming go again. Trevor, feedback is coming in thick and fast these days. We knew it probably would do as the podcast begins to get more traction and more listeners. And that is encouraging to know that the feedback's coming in, Trevor, because at least we know people are listening, which is always beneficial, just in case me and you just think we're talking to ourselves. But
feels like it sometimes.
But it's been, for example, I got a business coach who contacted me who'd be listening to the podcast, and the feedback that we get is, without wanting to bang our own drum, it's helpful because it gives us a clear indication that whatever we're doing, wherever it's saying, the message is getting out there. And Pam, she's a business coach, listened to our podcast, said it was great, and she listened to something in particular, and as a result has referred me to one of her customers who's looking for some help with cash flow challenges that they're having at the moment. And I also got a couple of messages from lenders.
Hold on. It's my turn.
It's not all about you, Trev.
No, listen. Here's the nice one. Here is a lovely one. Young Archie Hall contacted me a few days ago. Morning, Trevor. Hope all is well. I've been listening to your podcast in the evenings. And I really enjoy listening to the topics you choose and the guests you bring on. Here we go. For a young man like myself, who will be in the industry for the next 50 years, I'm glad to find a podcast relevant to the industry I'm in. Keep up the good work. Young Archie Hall, God bless you, son.
Thanks, Archie. That's an interesting comment, because when we come on to, obviously, our guest today, he's also a young man in the industry. We like to see that, like to hear that. I got some feedback from actually a lender by the name of Max Cap. They heard the episode regarding when Ian was on talking about Finance Kitchen, talking about the challenges that they have, especially with the non-home ownership. And he just wrote to me to say that Max Cap will look at businesses where the directors are not home owners. Their main drive is to assess the bank statements, which again is something that we cover in our conversation with Andrew later on in the pod. But he says they focus on the bank statement. They focus primarily on affordability. So if you don't know who Max Cap are, please look them up. They're on obviously on the usual search engines. They do offer a cash flow product that will maybe work for those in hospitality that are not homeowners. So thank you, Aidan Gregory from MaxCap, for that feedback.
Dave, I think that's amazing. But I'll tell you what. You sat down?
No.
Right. Okay. Are you stood up?
Yes.
Good. Right. Brace yourself.
Bracing.
On September the 12th.
September the 12th. Yeah.
We had a download. In Bolivia, South America, we've only gone and done it. I told you we go mad. Listen, all that leaves is Penguinville. That's all. Antarctica. And listen, I don't know if penguins speak English, but that's all we've got.
Penguinville?
Yeah, Antarctica, where do penguins live? Polar bears, all that. Listen, we've done it. We're in every continent. God knows what's going on in Bolivia, but there we go. I'll take that. Come back, South America. all is forgiven. That's it. We've done it.
Okay, well, that's another tick in the box of our podcast journey. Feedback. Yes, you remember in episode 2, Trevor, we haven't done much of this, which I guess we probably should do more of it. When we hear about lender news, when we hear about somebody in the marketplace that's publicising or marketing a product that we think needs to have some headline. Do you remember episode 2? We mentioned that Iwaka had launched a new 5-year loan product, which I was interested in because as far as I was concerned, I was surprised that no one else had done a loan product over 5 years, bearing in mind where we are. But that product was up to a maximum of $500,000. Guess what it is now? Incorrect. 1 million.
One of
they
your
now offering,
King's million.
They're now
pounds.
offering a £1 million 5-year loan offer.
That's interesting. I remember there's another lender in the marketplace, and it's interesting. They what it seems to me is with these new products, they tiptoe in, almost like a pilot, really, isn't it? How's it going? And if it works, they up the ante. And I've seen that on several occasions.
Look, I'm like we all are. We're all keen to understand what the market's doing, how it's evolving, how it's moving forward. And dare I say it, I'm an optimist. I always am, Trevor, but, lenders that I know and have brought out products like this, I'd love to get data on this because lenders have put this information out. I'd like to know out of 10 applications for £1 million over 5 years, how many of them get approved? B, if you look at the costings that go with this product, and again, I'm just talking out loud. I'm not saying it's right or wrong, but when I look at the costings of this product, if you work out for a 5-year term, £1 million lend, with the various fees that go onto it. I mean, I've got to ask whether that is the best fit.
I'm still excited about being in South America, mate. I'm not sure if I've got the energy for this, but we'll...
About South America, do you see the Ruggers?
No, did you?
Yeah. Argentina beat the Safas.
Oh, the Pumas.
And having just recently got married to a Safa, I kept my distance, not.
Yeah, I bet it was quiet in that house during that match. Just a quick name check, folks. We have launched the podcast website. Very simple to remember. BFM Buzzsprout.
Brussels what?
Brussels sprouts. No, let's not confuse the folks, Dave. Just calm down.
I think they're already confused. I think they're already confused.
Important message coming out here. BFM, Business Finance Matters, BFM .buzz, BUZZ. Or for our American cousins, BUZZ SPROUT.com.
Brilliant.
BFM Buzzsprout. And folks, you can listen to all and see all the episodes on there. We've got a little bit of fan mail. We could do with a bit more. We've got Dave's profile, my profile, and interestingly, the profiles of all the guests that we've had on so far. So take a look at that. You can reach out to them directly if you want. Look at their businesses and what they're up to.
Do you know what, Trev? I mean, it's not often you impress me, but I got to say, I was impressed by that bit of work. To have something like that is a nice badge of honor. I've gone through it. I like it. I've also seen on there's a support button. Is that right?
Yes, you're right, my friend.
So I think that what enables people to do, and just to be clear, anything we earn from this goes straight back into the pot to cover time, to cover software cost.
Yeah.
I've supported it. I'm paying $3 a month, Trev. So I'm supporting myself and I'm supporting you. That's $1.50 each. Okay.
Nice. I saw Mr. Ben Boggins. Not sure who Ben is, but thank you, Mr. Boggins. He's also gone for $3 a month, which in the King's poundage, I think is about £2.25.
Yeah, so every penny counts, as they say.
Less than a cup of coffee, mate. So look, we're not going to over-egg that, but seriously though, folks, it's a great way to help us build the profile, build the listeners, or you can pay to take us off the air.
That's a good idea. That's a great idea. We could have two campaigns going: pay to keep us on, pay to keep us off.
Yes, indeed. Right, should we get on with it?
Yeah, absolutely. This is our first lender, which we said at the beginning, we started this podcast, we wanted to get a lender on, and here he is, Mr. Andrew Frost from
Genesis Asset Finance.
Over to you.
Well, here we go then, folks. This is an episode I've really been looking forward to, and it's the first lender we have on the podcast. So let's get him introduced. Mr. Andrew Frost of Genesis Asset Finance. Andrew, welcome.
Thank you very much.
So, Andrew, I know a little bit about the history, but perhaps you'd be kind enough to let us know. I think you pretty much man and boy been involved in the business, but if you could perhaps start off by giving us a little background to the business and how it's all come to be about and what you're doing.
Sure. Very short version of quite a long story. So the business was founded in the mid-1990s by my father, who was an ex-mid-market commercial lending manager for one of the clearing banks. Decided to leave before he turned 40 for various reasons. I was he'd coming towards being a teenager at that point. Went off, did his own thing. He initially set up as a brokerage. In his own words, never having done a hire purchase or a lease in his life. Having been involved in commercial mortgages, overdrafts, term loans, that type of thing. Relatively large corporates. But used his contacts. And he'd always wanted to set up his own fund, so he set up his own lending book in 2000, ran the two side by side for a number of years, really up until about 2007, cherry picking the things he wanted to do and working with a few guys that he'd known over the years in the business. Brought them out the bank. They worked with him. Obviously 2007-8 happened. It lent through a couple of recessions. The bank knew that brokering was pretty difficult during a recession because he'd seen lenders pull lines from the lender side and decided that that was the moment to do what he'd always wanted to do and focus entirely on own book lending. Fast forward a few years, I joined in 2012, having done a couple of years in industry, the late noughties, and I've been here ever since. The running joke is I joined in the October of that year with a view to being here for 3 months. My dad said I was looking to change jobs. My dad said, don't change jobs before Christmas. Come work with us for a few months and then, quote, get a real job in the January of that year. And I've never left. My brother joined a couple of years later. He's my younger brother. And in 2020, just to make that year a little bit more complicated, we completed a long-planned management buyout. And we are now sole owners of the business. We run it, we make the decisions. And that's interesting. The history in a nutshell.
So just to be clear, the Frosts are, you obviously, Andrew, your brother Edward, is that right? And your dad's Jeremy, am I right?
Yeah, that's correct.
Army research is right, Trev. I told you.
Blimey, mate. And his dad's still involved on an advisory. Right, he's
playing golf, I hope.
He seems to be on lots of holidays from what I can gather.
Hide and slip as well. There you go. But it sounds like he set up a nice potential or left a legacy that you and young Edward have taken on. I mean, where's the business now? I mean, many of our listeners will be bored to death of us talking about the COVID years, but where have we got to with the business? Where do we sit now?
So we're about double the size we were at the start of 2020. And part of that, in terms of lending, and part of that is the COVID loan schemes were quite a boost for our business in the sense that we were accredited as an enterprise finance guarantee lender before COVID. So we picked up some business that way.
Andrew, from someone that's not, I have worked for lenders, but not to the same level as yourself and Trevor, these podcasts are being heard not just by the intermediary marketplace, but the small business marketplace as well. So if you can give us in layman's terms how you lend. I mean, for example, in our world, we call it blocking, don't we? So you have relationships with external banks and organisations that provide you with the funding, and then you reuse that. Could you give us some sort of a layman's terms of how that works?
Yeah, so that's exactly what it is. We use, as you mentioned, something called block discounting, which fundamentally is we borrow money to on-lend it. What most people probably don't realise is when it comes to that product, we don't just borrow all the money that we lend. We always have to put in some. So in an easy to understand kind of example, it's like buying a house. You don't get to borrow 100% of the value of the property. We always make a contribution into the lending. So we lend the money and then we borrow against that which we've already lent, but we don't get to borrow 100% of the money that we've lent.
And that probably sharpens your skills and the team skills, doesn't it? Because a much used phrase in these sort of situations, you've got some skin in every game that you're playing, haven't you? So,
yeah, absolutely. Yeah, very much so. So yeah, when we say we're lending with our own money, that's exactly what we're doing. We get to borrow some of that back to put into the next facility.
So it might be quite a tricky question, but one of the things that we're always talking about is trying to educate, particularly business owners here. Yeah. The question comes to mind: why would a bank choose to operate that way? I.e., use you as the gateway, if you like, rather than lending direct to these customers?
I think it's twofold. I think we're seen as a safer credit risk than the end customer, generally. So we're lending to customers that generally would fall outside the bank's credit policy. But also, and this is where I think it's the second part of that, the banks have de-skilled when it comes to small business lending. Mm-hmm. And so in many ways, they should lend to the customers that we lend to. They don't necessarily have the skills to do that. And because they're smaller facilities in the grand scheme of bank lending, the bank deems them to be high cost, low return. Whereas actually we think there's a good return. The cost is not particularly high, but it is obviously if you scale it up across the bank in terms of the number of eyes that have to look at a deal, the amount of time that goes into it.
And size of transactions, you're up to, what is it, round about the 150,000?
Yeah, so we limit ourselves to not lending more than £150,000 to any particular borrower.
And Dave, would you say that sort of level of lending really probably for many smaller businesses is more than adequate? I mean, I can't see a business owner that's turning over even £1 million, £1.5 million wanting a huge, great facility. So,
I mean, I can only talk on behalf of our business, and I know every intermediary has a different customer base and a different target market. For example, we are involved with some asset finance work at the moment, which is close to the million mark. That's far and few between. So I would say typical asset finance is between 50 and 100,000 that we see.
Yeah, so I think, Andrew, I mean, it seems to me, and I'm sure you'd agree, that you're right in the core, you're in the thick of it, and you're in the heartland, aren't you?
Yeah, we like to think we kind of, there are, as we all know, there are these kind of larger deals around and there are larger borrowers. But as you've noted, we deal with what we call the S in SME. We deal with owner-managed businesses. Yeah. Behind every business, however it's structured, are people, and it's people that make the decisions. And in reality, we've found over the last 12 and a bit years, people aren't borrowing more than that in any one go. They may cumulatively have a fleet of vehicles, but in any one go, they're not turning around and generally, unless they're in particular sectors, like, say, for example, construction, where the kit costs more.
Can I just go back to something that we touched on earlier? Andrew, you were talking about the relationship between the bank, or the blocker, for want of a better word, and yourself. And Trevor asked the question, why aren't banks lending direct to the marketplace, of which some of them are, of course, but as you said, their preference was to work directly with you because they see you, I can't remember the word, they see you as
a lower credit risk, I think I said.
So using that model, something that I know we talk about in our intermediary world is we scratch our heads sometimes to try and work out why, for whatever reason, work direct with the business marketplace as well as working with the intermediary space. And am I right in saying that you won't work direct? You will always go through an intermediary application process. Is that correct?
That's right. Yeah. So we've got probably about, I think there's 3 on the books who've come direct, and they're,
right.
They're just found us somehow on Google. We certainly don't target the direct market.
No. So just give me your reasons why, and I'm sure they'll mirror the reasons that Trevor and I have spoken about on previous podcasts. Why is your business model driven by working only with intermediaries as opposed to the direct marketplace?
So we chose to go that way for 2 reasons. There's a constraint as a smaller business, smaller lender, and direct marketing is very expensive. You've got to do a lot of it to get quite a small amount of business out of it. But the primary reason is we offer a particular, for want of a better word, financial product. And if we went direct, we would get applications for a wide variety of things that we don't provide. And that was evidenced to us during COVID when people went through the British Business Bank website. They saw CBILS accredited lender, and we were inundated with requests for bounce back loans, term loans, things we don't do. So we deliberately chose back in 2012, 2013 to target the intermediary market, to work with people who understand what we do, who are better at finding the end customer than we ever will be.
Yeah.
And know what we offer, and know that that's best fit for the customer, because the customer might come to us and we're not the best lender for them. They might be a bank type credit, and then they've wasted their time speaking to us. In some ways, they've wasted our time, and we'd have to signpost them to do it all again. with the bank.
You've got a trusted, capable pair of hands in the shape of Genesis Asset Finance in the middle, and then you're working with credible intermediaries that are actually that vital part of it, and that is that interface with the end user and the customer, and able to guide them to the right source of finance. I mean, it resonates with what we've been talking about for it seems forever, Dave, but doesn't it? It starts with the intermediary, doesn't it? It starts with that professional understanding what the business requirement is.
Yeah, I like to think so. We are very much a relationship-driven business. We like to think good relationships with our intermediaries. We tend to find that, that we get very similar type deals coming through because they know what we do, but also because we work closely with, as I've mentioned, owner-managed businesses, we develop good relationships with the customer as well as part of what we do. Slightly unusually, old-fashioned. We always visit the customer. So we always visit the end borrower if it's a new customer to us. We try and see them for every deal, but it's not always possible.
I like that.
And that means that we get quite a lot of repeat business, which is good for us, but it's also good for the intermediary. We always bring the intermediary back into that process.
This is echoing everything that we've spoken about previously. And again, the reason that we started this podcast was to put a signpost up to business owners, giving them guidance on how, and Andrew, you used my favorite word earlier, how to gain best fit. And when we say best fit, we generally are meaning, who is the best lender to provide the best type of finance for this business. But the point I'm trying to make is with Andrew's model in terms of we don't want to deal directly with the end customer, i.e. the business owner. We want to get it through an intermediary that's done most of its due diligence and hopefully knows what Genesis are looking for in terms of its appetite, and therefore the process that we are so precious about, the level of expectation once we engage with the business owner is, this is what we think we can do. This is the lender that I think we can do it with. And, it's never always easy and it never will be, but that process is much easier for the business owner to then go away, carry on making his widgets, whilst David and Andrew or Trevor and Bob, or whatever their name is, get on with putting the application together and hopefully getting the finance approved.
And the reason I think it benefits everybody is if the intermediary is aiming for best fit, you've got a much higher chance of getting an acceptance first time.
Absolutely.
Rather than the customer going direct and getting the 3 no's, becoming disheartened and deciding actually they're not going to invest, they're not going to buy that new piece of machinery, they're not going to grow their business.
I want to know a little bit more about this. I understand, Mr. Frost, young sir, that when you were at university, your neighbour was foreign royalty.
That's true.
What's going on there, my boy?
There's an 18-year-old from the edge of Manchester whose furthest trip, other than kind of the occasional family holiday to Europe, had been down to London once to an FA Cup final, which my beloved Manchester United managed to lose. I turned up at university to discover that I was living next door to one of the princes of Bhutan. He was my next door neighbour. I didn't even know where Bhutan was.
Where is it?
Bhutan
I've never heard of it.
Kind of between India and Nepal. It's up in the Himalayas. It was a closed kingdom up until about the 70s, I believe.
Well, how are you spelling it?
Bhutn.
Okay, and Trevor, we got any listeners there at the moment?
I don't believe we have. Carry on talking, I'll have a little check.
Carry on with the stories.
He was in the room next to me. We kind of got along pretty well. And then when it came to graduation, and obviously I've learned this while I was there and since, Bhutan is a monarchy, but the king quite often abdicates in favour of next in line. The former king, so his father had abdicated, his brother had acceded to the throne, but his father and mother were there at graduation. So we met the former king and queen of Bhutan and had a little chat. It was one of the very surreal moments.
There we go. Something else, folks, that you won't notice. Dave and I are in our full glory on the screen. Mr. Frost hasn't appeared visually, and he gave us a little explanation. Would you like to share with us your thoughts and why you're not on full screen with us?
So I regularly as I can, try and get on the bike, which is in my kind of home gym is a bit glorified. It's in the garage. It's on a turbo.
Oh goodness, not another flaming cyclist.
Well, I don't cycle on the road.
Good.
I have no intention of getting out there. It's where I live. It's raining as it always is, so I like to stay in the dry. But I work from home most of the time. I've moved the office back home during COVID, and I've not really left. It works very well for me. But I found during COVID after about 12 months, it was a very, very busy time for us dealing with existing customers, dealing with all the new things that were going on, that I simply wasn't getting outside. So I took up cycling on the bike that I got, bought a turbo, put it in the garage. And I do that every lunchtime, wherever possible. So the reason that I'm not on screen is because I am, after this, immediately going on the bike. And I've probably not an image that anybody would like to see.
Oh, Andrew, I'm sorry.
Thanks for saving us from that.
But as I look out the window now, I can see my little hurt locker. I don't use a turbo. I've got a Watt bike, which is linked up to a software program called Swift, which I am absolutely addicted to. And my cycling time is starting somewhere between 5 and 7 for an hour, usually 3 or 4 times a week. It's just that divorce from home stroke office to an area which a lot of thinking can be done. The impact that you get from the endorphins, as far as I'm concerned, I can go in one individual and can certainly come out another, a lot more happier and a lot more focused on what I need to be doing. So I'm very much on board with that process because it works. I'm not a runner. I know people like to run. So I think whether it's gym, whether it's bike, and it's finding that level of exercise that you enjoy, because how many people do we know that do exercise but hate every minute of it? And if you hate something, the chances are you're not going to continue doing it for very long.
It really helps with my mental health, with my brain health, as you said, because it gets me out of doing whatever I'm doing, reading a credit paper, dealing with a delinquent customer, which does happen from time to time.
Cool.
It's just a way to just get away from it and just force myself to take a break.
Andrew, you have very kindly engaged with us with our guild hats on. If I could be so blunt, what's your thoughts on the whole concept of the guild now that you've had a few weeks and months to sort of digest it?
I think it's a very positive development. We, as a business, are very happy to support the aims of the guild. There's a way of signposting good standards across the industry, because like there is in any industry, there are good participants, there are bad participants. Guild membership, from the lender's perspective, enables us to see that these people have got experience, they know what they're doing, they're likely to kind of put together a good proposal, but they also understand what it is that a lender's looking for.
Sure.
It's good for the lender, it's good for the customer, because the customer can know that they're trusting somebody with their business, with raising finance for their business, what has a track record and knows what they do.
Something's been missing from our industry since I can remember. There are trade bodies around that also have standards that they try and keep to, but the guild is very much a three-way relationship, isn't it? Making sure that the business owner is being treated fairly and we're looking after them, that our best interests are with them, and making sure that the lender is involved with the whole process and vice versa. There's a full circle of conversation and communication to make sure that everything we do is being done at the highest level possible to ensure that we keep those standards and everyone's working in the same direction.
Someone asked me the other day, in actual fact, I think it was one of the regional directors from British Business Bank, what do businesses want over the next few years? And my initial reaction and personal comment was stability. Nothing crazy, nothing too stupid, nothing too shocking or whatever. What's your views, not the political, but the economic landscape playing out over the next few months and years?
I think it's a little bit difficult to tell. I think what we've seen over the last couple of months, and it's just, dint of the fact that there was an election at an unusual time of year. So there's been a bit of a lull between that. I think until we get to the budget, people won't really know where we're aiming. There's a lot of talk about we're kind of stabilising the government is stabilising the ship, so to speak. But until we then set off on a course, people won't really know. And everybody will disagree about whether the course is right or not. There'll be arguments on both sides. But actually pointing the economy in a particular direction, whatever direction that is, will then enable business owners to say, okay, this is what we've been given a guidance, so that's what's going to happen for the next 12 months. I can now begin to plan ahead. My experience is very few smaller businesses plan that far ahead. You try and aim for the next 12 months.
Yeah.
I mean, we as a business have 3, 4, 5 year plans, but the reality is you're kind of pretty set on the next 12 months that you think you can get that. That's where you're aiming for. And if that happens, that should lead to the year after that. But it's all very subject to change. I mean, who in December 2019 had a plan that foresaw the economy being closed? You can't see beyond that. So
Quite.
I think there was probably some optimism. There always is optimism around change. People's, whether people voted for it or not, people see change, think, okay, something's going to be different. Let's see how that goes. I don't think that's because the budget will necessarily impact business investment decision directly. I think it's just that a decision has been made. People will then say, okay, that's settled. Whatever happens is happening, and now I can get on and go on with my life.
I'll just make a comment on something you just said a minute ago, Andrew. So, and I know I probably talk on behalf of the majority of the intermediaries, but have you seen a drop in new business inquiries, number one? And number two, have you as a lender had to change some of the ways that you underwrite due to the current economy and concerns?
A lot of the economy is built on how people feel about things. It's intangible, isn't it?
Yeah, this is my point. But the level of business inquiries coming through has definitely dropped off. Now, is that because there's still money around from the various C-bills and business bounce back loans? Don't know. Is it because general confidence is low and therefore business owners are just preferring just to keep the business where it's at and not wanting to invest? But the other challenge is when the inquiries come in, and again, I'm talking on behalf, not just myself, but the sort of information that we share is that the lenders, I'm not saying you particularly, but in general, the lender's appetite to lend has got harder. The amount of questions that keep coming back has become more so. The decline rates, and again, I hear this from lenders directly because I think I'm getting 2-3 calls a week from lenders looking for business. I got a couple of emails in yesterday from lenders wanting to know if we got new business. And to me, that's typically a sign that lenders aren't getting the inquiry levels, or they're not converting the same amount of business that they are wanting to for whatever reason. So as far as I'm concerned, Andrew, and I know you're slightly different, you're independent, but have you seen that inquiry level drop over the last, 24 months? And have you seen your level of underwriting change to, deal with or compensate for some of the challenges and the worries that are still happening in the economy?
I don't think we've had to change. And genuinely, I don't think we've really seen a drop off. As a smaller lender, we probably see a smaller volume of inquiries. So we've actually had one of our best years this year in terms of volumes of new business that we've written. Historically, asked for more information than a lot of other lenders, and that was a challenge previously. I think we're now asking for what everybody else asks for, as in they kind of come up to the extra information that we were always requesting. But at the same time, there are challenges across the economy. There are challenges with certain types of equipment are actually worth as pieces of security versus what they cost. We've had high inflation for a couple of years, but the fundamentals of what something is worth hasn't necessarily changed. So there are challenges around underwriting when it comes to that.
Andrew said something very important that they have always asked probably, and forgive me for putting words into your mouth here, Andrew, more information than perhaps other lenders might. Now Andrew is seeing that, or feeling, or being told that other lenders are now asking for the same level of information and background information. So, dare I say it, and again, I'm sure Andrew might be mentioning it, as listeners are probably becoming aware. Andrew's business does not compete with banks, i.e., you've done it sensibly. You've looked beyond, you've looked under the bed covers. You've always asked the same questions. You've always asked for the same level of information. And might that have, as I say, helped insulate you from some of the toils and tribulations we've heard in other parts of the sector?
Yeah, I like to think so. When you've got your own skin in the game, you're quite keen not to lose that money by making bad lending decisions. So we've always kind of gone slightly more in depth and been slightly more onerous with the information that we require. That has made it challenging historically to get business over the line, because there will always be a lender who'll say, well, I'll take less information. What we're now seeing is, and what I'm hearing is that other lenders are asking for more and more information, which is unusual for intermediaries that have dealt with them. For the intermediaries that deal with us, we're not asking for any more or any less. There's no change in those requirements.
When you get an application in, where are your eyes focusing in straight away? Is it the balance sheet? Is it the P&L? Is it the asset? Is it the affordability? Is it the Experian report? I know you need the whole thing, but where are you zooming in on first in terms of priority?
So for us as a lender, we focus a lot more on a company's bank statements than we do on its accounts.
Affordability.
Yeah. So we determine affordability more from the bank statements than we do from the balance sheet.
Last 3 months, last 6 months?
We've taken the last 6 months for 5 years.
Just to explain for folks listening, as filed accounts can be, often 12, maybe 18 months. You aren't going to get more info on the present status, their cash flow of that business, and their recent bank statements.
Correct. And I go back to when I first joined, I actually went and did equivalent of the old banking exams, that bank statements don't lie. You can't magic cash out of thin air. The bank statements tell you what's there. And, there's a really important indicator.
The first thing I'm looking at is affordability. However, I've got a situation at the moment, for example, affordability in terms of their current situation is good, but they're about to invest in something pretty expensive. And you would probably look at the bank statements now and say, well, this is going to be a squeeze. But once that asset is on board, the amount of earning power that asset is going to have for that business will go beyond the monthly repayments. Is that something that you take into consideration as well?
Yeah, absolutely. So, you want to be sure that if for some reason the asset doesn't generate any income, it can be paid for, but or at least you can begin to make payments towards it. And as much as there is a push towards more automation, and we're very keen on bringing technology into our processes and business, lending is an art, not a science. It requires judgment. And when you scale it up to the big, what's known as, we all know as flow business in the banks, there's an element of they take the art out of it, and if you fit into an algorithm at certain levels, that will do, because they just run a statistical model. And when you're a small lender like us, that's not the case.
Andrew, I'm going to mention something here that I know it frightens us all to a greater or lesser extent, and it was triggered really by you saying bank statements don't lie. How is your view, how is your take on current levels of fraud out there in the market? Have you come across much? Have you heard much? Have you seen much? And hopefully you haven't been, a victim of such. But is that much of an issue for you at the moment?
I think it's a really hot topic in the industry, particularly after what happened with the Arena TV scenario. It's been around in the industry for a long time.
Yes.
Since way before my time, there's always been fraud of some kind and people attempting fraud. I would say we haven't had any fraud. The caveat there is that I'm aware of. And that's the key. Lots of people, lots of lenders, and we were one of them, who were involved with that Arena TV, would have said the same 2 days before Arena TV was under.
But do you know what, Andrew? You're doing something fundamentally important. You said it right early doors. You go and meet the customer.
Sure. We conduct all the checks. We do as much due diligence as we can. We get external advice on the equipment. We run all the background reports. We go meet the individuals. Whilst asset finance is a relatively low fraud risk industry because it requires numerous parties to all be in on it. I personally, have the opinion, if someone is out to defraud you and is determined to do it, they will do. And there's not a lot you can do about it.
No.
It's about trying to minimize the chances of that happening.
Yeah. And on that, Andrew, do you finance used equipment as well?
We do. Yeah.
So, Trevor, didn't we have a conversation a while back about how does a lender identify the asset if it hasn't got a serial number or a registration number? Is that something, Andrew, that you would do? So if it's a piece of equipment, I'm trying to think of something specific, about printing press or something where there's no identification, which can't be listed somewhere.
It's always a risk. So it's one of those risks that you're running, you have as an item in your risk register that if somebody really wants to sell something out of trust, that they're going to, and there's not a lot you can do. But there are some mitigations. So I know we're not the only lender that does this, but it's become increasingly commonplace for example, wheeled assets to have a lender's tracker fitted to them so that you stand a reasonable chance of it, knowing where it is, it being recovered. Yeah. You list things on chattel's mortgages at Companies House. You list them in HPI's databases. But that's also the reason that we go to see the individual. And I kind of circle back to this, lending is an art. 10% of the underwriting decision is looking somebody in the eye.
Yeah.
And it will never tell, and we say, it will never tell us to do a deal, but it will tell me not to do one.
Andrew, as we move to sort of some final comments, it strikes me very comfortable as a business. You know what you want. You know what you don't want. It feels to me that you've got the basics right here. You're not competing, as we said earlier, with NatWest or some of the larger conglomerates. Genesis Asset Finance, to me, seems in fairly good shape and in good hands.
I have to say, Trevor, any business that has a toilet twinning charity, I guess my vote.
Yes, my vote.
How the hell did you get involved with that? But at the same time, charities are important, but toilet twinning.
So it came about it started when my father was still involved. It came about via my parents' church connections. We brought it in to the business. We kind of did twin the toilets in the office. Everybody twin their toilets at home. And we will twin a toilet for every new customer, and the customer gets the certificate.
No. I'll tell you what it doesn't mean, Dave.
So, what?
Not sitting next to me during my morning constitution. That is not what toilet.
Okay. All right. I promise.
I'm sure Andrew would be happy to hear from anybody that's got any questions about him and the business he's running very successfully.
Okay.
As you said, if anybody's got any questions, we're always happy to answer them in any way that we can.
So we appreciate that. And again, thank you for your time. Much appreciated.
Andrew, thank you.
Yeah, thank you, Andrew, so much. Good luck for the rest of the year. And yes, as Trevor said, we'll keep in touch and look forward to seeing you soon. There we go, Trevor. That was pretty good, eh?
Loved it, mate. I knew he'd be good. As I said, I've known Andrew more than his brother. I've met Jeremy, the father, some years ago, and they're running a solid business, mate. They do it right. They do it properly. Great supporters of the intermediary channel, and I think they'll support the guild. Andrew does what he says. He doesn't just make it up.
He's only 38, Trevor.
Mate, he is pup. You're old enough to be his grandfather.
I say that obviously as a compliment because, we talk about our industry and the lack of young blood coming through, and the lender marketplace is, again, from an intermediary point of view, it can be a love-hate scenario. Either the lender changes its way of lending or the individual that you work with at that particular lending organisation leaves or whatever it is. There's always a sort of a toing and froing of relationships with some of the lenders that we might work with. But listening to Andrew, obviously his age, how he works, the lender itself, Genesis, what they do, how they do things. Yeah, just really refreshing. And certainly for me as intermediary, I enjoyed every minute of it.
Do you know what he can be, though? He's in that and I think a lot of medium to bigger size lenders wish they could be in the same mindset as him. But, sometimes small is beautiful. They can be nimble. I don't think they need to be nimble because I think they know what they're doing. And you know as well as I do, Dave, there are lenders out there that they doesn't seem to me, sometimes they've got a clue what they're doing.
We can go on for hours about that. And again, this is where intermediaries like myself, we have to get to know the marketplace as best as we can.
It keeps everybody on their toes, I suppose, is one way of putting a positive spin on it. But, as I've said before, you guys and girls it's your daily job. You're running small business yourself. How on earth does the uneducated small business owner know what to do, who to turn to?
We can repeat that line. And this is something that I'm looking forward to in the future, is actually engaging with more business owners and say to them, what did you do when you woke up one morning wondering what am I going to do about getting some cash into my business?
Mate, listen, I cannot overemphasize the importance. We've been banging on about it for the last 4 episodes.
Banging.
The guild website's up and running. That's really exciting. It's version 1. But, folks, go and see who's in the guild. Transparency, Dave's on there. There's a good crop of people, length and breadth of the country, England, Scotland, Wales. We even let Northern Ireland in, God bless them. But, we got some really good quality people there. We have each representing bona fide businesses, all got their own ways of engaging. But one thing that ties them together is that they're all prepared to come and see you, and listen to what a lender said there. Goes and sees a new customer. Wouldn't the world be a different lending sphere if that was...
No, absolutely. It's a way of working that we all support. And again, for the business owners to know that we're not just on the end of the phone, we're also, even though a lot of us still work from home and we use all the technology that's around to have meetings these days, the car is still parked on the drive, Trevor.
Indeed.
Still there.
Indeed.
With fuel in it, which makes a change.
Folks, it's great, isn't it? So thank you to Andrew. As I said, you'll be able to see his details on the website fairly shortly. Once we let this one escape, which hopefully should be in a few days' time. We're going to be recording our filler next. And Dave, unless I'm mistaken, that will be our 10th and final episode of Series 1.
It will be the end of Series 1. I was listening to the first podcast the other day, and I think we said, this is Series 1. We're going to do 7 or 8 episodes. I can't remember what I said now. But hey, it's good to actually get to the point where it's been successful. We've had some really good feedback. And to finish on episode 10 is a nice round number.
Yeah.
And then we can look forward to the next series, which we'll talk about in that little filler coming up in a week's time.
Yeah, nice announcement we're going to be able to make in that one. Hey, listen, Dave, God bless the Bolivians. That's it. Apart from Penguinville, we're in every continent.
Okay. Well, what about this prince that Andrew spoke about in Burkett or wherever it was?
Bhutan, Dave.
That's the
Bhutan.
one. Began with a B, I knew that.
I think they've got a dragon on the flag, unless I'm mistaken.
Can we get someone to download it over there?
Well,
You got any contacts?
he's got to have some contacts.
He knows the king, doesn't he?
He's bowing to, next door neighbour, apparently.
You can just put it on a text.
Oh,
Download the podcast, will you, King?
Kingy. So that's it, folks. Wrap up. We are going to be back with a filler in a couple of weeks. That should hopefully be out middle of October. That will wrap up the first series, and we'll talk about where we're going from there on that one. Thank you for your support as always. Thank you for listening. Spread the word.
Yeah, keep your comments coming in, guys. I know we've got an email address. I know we've got social media. I've been getting direct emails. That's absolutely fine. As long as the comments keep coming in, then that's all we want.
Okay, mate.
Thank you again. And
All right.
Trevor, lovely to see your face.
Andrew.
And hopefully I'll be meeting up with you pretty soon.
Oh, yeah.
And in the interim, I'd like to say goodbye.
Goodbye from me. See you, folks.
Bye.